Hey guys, welcome back to the channel. In this video, I'm going to go over my weekly stock picks for the week of May 22nd through the 27th. Before we do, just to reiterate, not a financial advisor. Make sure that you do your own research before investing. Also, if you find value in today's video, smash the thumbs up button, subscribe to the channel if you enjoy our content, and hit the notification bell. That way YouTube can let you know every time we release new content. Other than that, guys, let's dive right on into it. Alright guys, before getting into my picks for this week, we're going to talk about a recap of last week, which the picks were CLNE. They had some insider buying, Tesla, and then IQST. And it takes no rocket scientist to figure out that neither one of these plays did much, because the markets overall are just so volatile right now that you have to really be active and time it right, almost day trade it, in order to get any type of profit out of this if you're not in it for the long term, if you're doing swing trades. CLNE, guys, was down about 1.21% for the week, which is not terrible considering how crazy, again, the market is. We got as high as 508 a couple of times, actually, and then started falling back down. And then Friday, we started kind of making a little bit of recovery before the close. Tesla down almost 14%. IQST was the only one that was up, actually, 5% on the week. All right, guys, so my picks for this week: ZNOG, Zion Oil and Gas, SQQQ, and TQQQ. And for ZNOG, I'm not saying that it's going to pop heavy or anything this week. I'm saying I'm looking to add some more this week in anticipation for the annual shareholder meeting, which is coming up in a couple of weeks. I like it at these levels, and I'm going to watch to see if we, for some reason, break below that 20-cent mark. If we do, I'll buy a little bit more than expected, but 20 to 22 cents, I'm game right there. I'll add some more to my position for sure. SQQQ and TQQQ, these are 2 3 times leverage ETFs, one shorts basically the Nasdaq. When the Nasdaq goes down, this will go up, and then obviously with this one here, when the Nasdaq when the Nasdaq goes down, this goes up, and when the Nasdaq goes up, this goes up, and then this will go down. They work opposite of one another. And so we're going to look at that one. That's going to be two of the things that I'm eyeing. If the markets start going down again, they look like they're going to be open in red, then this is what I'll get into on Monday. If it looks like the markets will be going green, I do own some of this now, and I continue to nibble on it as the markets keep falling, because once we have minimum of some type of relief rally, this thing will start shooting up as well. So on the watch list, SHIB, there's a lot of buzz on SHIB about possibly partnering with Red Bull, and then having a lot of some other type of catalysts and announcements coming up over the next couple of weeks. So just kind of keep an eye on that. I'm not saying we're going to a penny or anything, but it's something to kind of keep an eye on coinmarketcap.com. And of course on Twitter, kind of take it with a grain of salt. There's so many bots on there that post all kind of random stuff. I would check coinmarketcap.com to get any type of news or updates on Shiba Inu. But this for sure a longer term hold. You're not going to get to a penny overnight. You're not going to be a millionaire overnight. This is something that you're going to have to continue to add to your position and hold and be patient, because if you're looking to buy it today and be a millionaire tomorrow, not going to happen. So those are my picks in my watch list for the week. Let's go ahead and take a look at the charts and see what they're telling us. All right, guys, first of all, taking a look at Zion Oil and Gas, ticker symbol ZNOG. So we're going to take a look here. We already did a technical analysis video on this on Friday. I know most of you have seen it. I do think that we could potentially see a little bit more downside, maybe come down to 20 cents. And if we do, love to see us bounce off of that. But I could be completely wrong. I hope we don't. I'd really much rather see Monday we come out with a big green candle and start moving up and retesting the 25-cent mark. But that's just kind of a feeling. We're still in a bearish pattern on the MACD. We're about fair value on the RSI, which tells me we could go a little bit lower. And I think at 20 cents, we are undervalued there, which will bring some more people back into the buying game. Key thing too here, guys, I know we keep talking about 35 cents for that overall cup and handle, but you kind of see one really forming now at this level, the 28-cent level. And then we came up here, we hit our head at 28 cents, and now we're coming back down. Here's the handle. So in my opinion, if we fall down to 20 cents and bounce off, that's going to be a great sign. And I think we could, off of some news, slingshot forward and then come up and retest that 35-cent mark, hopefully. And it would be nice to see, I mean, even if we don't go all the way to 20, to bounce off of 22 would be a good sign in my opinion. So let's take a look at TQQQ, and then we'll look at SQQ. So 24.93 is currently, and I say currently because it keeps falling down and down and down, is currently your overall floor on the 180-day 4-hour. Last week it was only 26, and then we fell below that. So this here is obviously in a bearish pattern, and we've been in a bearish pattern because the overall markets keep continuing to go down. So any type of relief rally or turnaround is going to send this higher easily to about the $40 mark, maybe even the $42 mark over, you know, a week's period of time of several green days. But you need that to be consistent in the market. As you see, we start trading up. We have 28, and then we go all the way up to 33. It's a $5 increase, and then we just give it all back and then some, right? So we need some consistency in the market as far as you know, 2-3 green days in a row, which I don't know if we're going to get that anytime soon. But this is this is one, like I said, I'm continue to add, just kind of nibble as the market goes down, because eventually on a relief rally, this will pop as well. But you can catch it on a good day trade as well. I mean, whenever the markets are starting to recover at some point during the day, you can get in for an hour or two and ride it up, probably make a couple $100 off of it. Just be ready to sell, because just as soon as it goes up, it can come straight back down. And opposite on this one here. So 27.90 is your floor here for SQQ, and this is basically going to go up when the markets go down. Okay, so 63.86 is going to be your overall tip top on the 180-day 4-hour. And you see here, the markets have been ever since about April going down and down and down. This is going up and up and up. Okay, from, you know, $30 all the way to $63. And we could see it go, you know, continue to go up as long as the markets keep going down. This one's a little bit more tricky, because you don't really know when you know, when the markets are going to turn around and stuff. So to me, on the open, if I'm looking at the futures and I see that the Dow's down several hundred points, maybe get in on the open and then let it ride up for, you know, a couple hours, and you can get out of it. But these ETFs here that leverage, the 3 times leverage ETFs that short the market, I'm a little bit more iffy on. And then I'm more inclined to nibble and buy some of the ETFs that go up when the market goes up, just because historically the market overall usually does go up. So I feel more comfortable doing that, because, you know, it's kind of hard to tell just if I'm going to continuously buy this for the long term, how long it's going to take for the market to crash or go down. And because these things historically, kind of like UVXY, typically the ones that short the market are basically, they decay over time. As you see here, they just constantly go down and down and down until eventually they reach a certain point to where they do a reverse split and they increase the price up, and then they continuously go down and down and down. So anyway, kind of sorry for the rant there. Let's look at the S&P 500. I'm going to take a look at it here. 3810. I did say that I thought that we could hit 3800. I've been saying that several times, and I thought that when we got to about 3800, we would at least temporarily kind of bottom out and see some type of relief rally. And I'm hoping, really hoping, that we see something like that this upcoming week. Okay, and that we can kind of push higher, at least for a couple of days, because what's going to happen on this relief rally, if this crash isn't over yet, then it'll give you an opportunity to sell some of these positions that you got into recently and either break even or take a little bit of profits off the table, and then protect yourself in case we do see another big pull down in the market. And people are all over YouTube saying, oh my God, the market's crashing. We're just starting in a bear market. Oh my God, it's here. It's been here for a while, guys. It's been here for quite a while. Look at this. This is January 3rd, where we're at the tip top. January 3rd, 2022. And what's been happening ever since January? We've been coming down and down and down and down and down. So the bear market's been here. People are just starting to talk about it. And in my opinion, I think we're close to, if we haven't already, bottomed out to where we're going to start getting a little bit more buying pressure back up, because typically when people are freaking out and selling everything and YouTube's flooded with, oh my God, the bear market's here. Oh my God, the stocks are crashing. Oh my God, oh my God, oh my God. That's whenever you're like, okay, now might be a good time to buy, because eventually something's going to change to where we do continue to, or like I said, even if it's a temporary relief rally, it's where we come in and people think that we're moving higher and, oh, this is over. People start flooding the markets. I think that's getting close to being here. But of course, you never know. This market is super volatile right now, to where Monday morning we could just flush and go, you know, break that 3,800 level. I really don't know at this point. It's kind of crazy. So what I'm doing is continuing my plan on my investments. I'm just continuously adding a little bit here and there as the stocks go down. I'm just buying a little bit here, buying a little bit there. And whenever we do turn around and start making a move to the upside, then I'll have those stocks in my portfolio, and hopefully a lower average cost, to where I can benefit and profit off of those as well. So guys, we are 6 away from, actually now the current time of the video, I just checked, 4 people away from reaching 2,000 subscribers. So if you haven't subscribed yet, if you enjoy our content, please subscribe. It's only 4 away from hitting our 2,000 subscriber goal for the year. I would surely appreciate it. So if you have a friend who hasn't subscribed yet, if you can share this video, send it over to them, say, hey, hit the subscribe button. I'd love to get to 2,000 by today if possible. That would be fantastic. So anyway, guys, just wanted to provide you this weekly update, a little bit longer than normal, a little bit more you know, kind of different than normal. Talk a lot about the market overall as opposed to just a couple of different stocks, because I think, you know, this is the big week ahead. Keep an eye on the VIX Central. Keep an eye on the Fear and Greed Index. We are in extreme fear in the markets, so typically that means people are going to start buying in and pushing it back up, even if it's temporary, okay? Even if it's just a short relief rally, in my opinion. But we'll just kind of wait and see. All right, guys, we'll catch you in the next one. Take care. Have a good day.